Hey everybody, today is Friday the 12th of July 2013 and this is Brian Shannon speaking from alphatrends.net. Let's take a look at this market here. We had a very strong week once again. The S&P 500 was up 2.75%, Russell 2000 up 3%, gold up 5%. Let's take a look at the trends here and what is potentially likely. We've been talking about this, the bounce from the volume weighted average price. That is the year-to-date volume weighted average price. We were looking at as potential sort of support a couple weeks ago, and the bounce did begin to materialize there. Then we were looking at the potential of resistance in this area, and what we were looking for was the possibility that we could short this market if it made a series of lower highs and lower lows below the 5-day moving average, which then began to decline. So we never had that happen, so there's no reason to be a short seller. This is what we were looking for as a potential. Instead, the market turned sideways and we saw a continuation higher, and the shorts are getting basically taken out in body bags as we are at an all-time closing high in the S&P 500. So you've got to be impressed with the resilience of this market, and it's a good reminder, as always, that you don't sell short at what you perceive resistance might become, unless you're a fund that needs to put out $10 billion worth of stock and you have to leg into it. There's no point in being early to pick the top of a rally. And certainly no one has done that correctly here, as we went right out at the highs, except for this last minute here, I guess. But the market, again, is in a primary uptrend. We were expecting a little bit deeper correction, and then looking at this as the next potential level of resistance. And I'd caution once again that we don't want to sell short here. Instead, we want to look for evidence that the market is in fact pulling back. But while we have a rising 5-day moving average, any short sales that you consider should only be done for day trade opportunities. Now, it seems like, and that's a pretty easy thing to say, it seems like the market is overbought, and it seems like it's due for a correction, and it seems like it should have a deeper pullback, but the market doesn't care what it seems should happen. The market is going to do what it does, and our job is to look at the key levels of potential support and resistance, decide whether or not it takes there's a sufficient reward potential versus what the risk is perceived. And now we've got to look at next week. I think the volume weighted average price for this week down at 165.50 is a decent level to look at as far as a bigger level of support. But we saw that basically Thursday's little resistance became Friday's support in here. So 167.20 is going to be an important level initially. We have found support today also at the 2-day volume weighted average price. So since that gap higher that we saw 2 days ago, the volume weighted average price did in fact find more buyers in here today. And then as the market got back above VWAP, it made a little false move and then continued higher. So the Nasdaq also had a very impressive week. This is the orange is the volume weighted average price year to date. This is a moving average, so it actually touched upon it as we had noted and pulled back to the 2/3 retracement of the range from January 2nd, which is the first trading day of this year, to the highs that we had seen earlier this year. And now we're at new highs for the year as this market has just gone uninterruptedly higher, and we have multiple year highs in here on the Nasdaq as well. And looks like, if you look at the monthly chart, maybe it's headed for $80. We'll see. No one knows where the market will go or what it will do or where the resistance will be found. We had a lot of people saying, that this will become resistance, or the 50-day moving average. They were going to short it at the 50-day moving average. And unless we have our trends aligned, it's a very low probability trade that you only want to do those trades for very short term, and I mean day trades. And really what I try to focus on is looking for the swing trade opportunities. I day trade a lot of them. Subscribers to Alpha Trends day trade a lot of them. That's what the chat room is for. But the videos that I do each evening for subscribers with ideas are meant as swing trades. So the Nasdaq is again at multiple year highs. It's 2 days in a row that it's done that here, closed at them. Actually, 2 days in a row. The volume weighted average price of the last 2 days is down at 74.80. So it was just it's been a real solid market. And anyone who's even if you're shorting, and it gets back above that VWAP, the VWAP tells you that the buyers are in control for that session, and you're likely to get losses. The volume weighted average price for the week was at about $74 a share in the Nasdaq, and certainly some kind of pullback down towards 74, or people will be obsessed now on any little pullback that it will have to close this gap. Not all gaps do get closed. Eventually they do, but oftentimes it takes a lot of time before that does happen. So focus on price action. Realize that we are extended here, and when we're extended, it means be extra cautious. Be more disciplined in about not chasing stocks, but instead looking for the ones that are just starting to move. And there still are good long setups, and that's basically what we've been focused on, as always in Alpha Trends, is low risk, high probability trades in the direction of the primary trend. The Russell 2000, as we know, has been the real strong market. This group is, or this the Russell has been 5 days in a row now at all-time highs, and that's been the trend this year. After that pullback, if we looked at, it didn't come down. It's been stronger in that it didn't come down to the volume weighted average price year to date. It didn't get down to even a 50% retracement, and it really led the way higher once again. As it got back higher, it's been maintaining above a rising 5-day moving average. When the market breaks below that 5-day moving average, starts to turn sideways, we get cautious. As it makes lower highs and lower lows below it, we will have a bias of short, but with a primary trend higher, then we have to be ready to move to the sidelines and cover those shorts as it gets back above, and then we look for either the opportunity to sell short once again, or we go with the trend or sit on the sidelines. As I wrote in the post, it's better to, one of my favorite phrases, I don't remember where I heard it first, is that it's better to be on the sidelines in cash, kind of wishing that you were in, than it is to be in the market and wishing you were out. So think of all the people who shorted over in here, who are kicking themselves for it, and we're getting them squeezed higher. It's better to be on the sidelines thinking, wow, I wish I was in this market, I wish I was participating. And a lot of people were very bearish about this market, but if you were waiting for price action to implement a position, then you shouldn't have been involved, and it's better to be on the sidelines than it is basically to be in the market and losing money. Semiconductors, this group had broken down. We were looking for potential resistance in here. Then I really thought we were going to be more sideways for a while, but we saw the gap higher on Thursday, and now we're up to multi-year highs in this market as well. So semiconductors continue to show strength here. Next week we'll be focused initially, I think, on if these markets can pull back and hold their rising 5-day moving averages. That will be an initial thing, and if it does pull back to a 5-day moving average in the semiconductors, that's down at 38.5. In the S&P 500, it's down at 166-ish. Yes, there will be opportunities to sell short, but the path of least resistance continues to be higher, so just keep that in mind. Financials were up to multi-year highs as well. We've gone, we've been talking about the $20 level for close to a year, and now it's clearly it's coming up into this prior band of support, up into about 21 and a half. It doesn't mean it will be resistance. It has the potential to be resistance. The financials, you can see here, made a real nice measured move, basically from 1860 to 1970, so $1.10, and we add that to this 1930, and we come up with a price objective 2040. Now, does that mean that's where I think this market is a place to sell short? Absolutely not. We've still got a rising 5-day moving average, and we've got a pattern of higher highs and higher lows on the short-term and longer-term time frames as well. Let's take a look at gold. It was down 11 pennies today, but for the week it was up 5%. My opinion remains unchanged in here, just as it was over here. I'm still bearish on gold. It's got a primary downtrend, and this is just a bounce within a primary downtrend. I don't really see it as a value. I think that it's likely to continue down towards 113, perhaps lower. Anybody's guess is as good as mine. I'm not here to predict what a bottom will be or a top will be, but instead to look at it objectively and say, here are the potential levels, here's what the path of least resistance is, which is lower. Odds are greater on the downside, but you can't fight the intermediate term momentum as well. So everybody has their own style, and I'm not trying to force any opinions or beliefs upon anyone else out there. I'm trying to look at the market consistently, objectively, and share some of the 20 plus years knowledge that I have, experience and knowledge that I've accumulated while trading actively. So thanks for tuning in, and have yourself a good weekend.